Hi, I'm Raven of Trade with Raven. I am a new trader, and if you're a new trader too, come along on the journey with me. So today we are going over the 9 EMA. If you're new to trading, you've probably seen this term thrown around and wondered, what is it? Why do I need it? How should I use it? We're going to go over that today. So, I use the 9 EMA on all my charts. I usually have a 1-minute chart, a 5-minute chart, and a daily chart pulled up when I'm trading. So, and I use it on all my charts. So today I'm going to show you what it is. But before we even really get into the deep dive, let me show you how to put it on a chart. Okay, so the first thing I'm going to do is I'm going to pull up one of my trades in Trader View. Now, I use this on my charts in ThinkerSwim. So when I'm trading, but I also use it in Trader View when I analyze my charts. So I'm going to show you how to put it on Trader View. Here, I've got a trade from this week on AIFF. And this is a 1-minute chart that I set up. So I'm going to click on indicators. Okay, I'm going to scroll down to moving average, and you'll see there's like 8 different kinds of moving average. The one we're looking for here is the moving average exponential. So I'm going to click on that. And then here, I'm going to actually click into settings, and I'm going to change the color because I love making my 9 EMA light blue, but you can make it any color you want. You want to make it a color that is going to stand out to you, okay? That's really important. And all right, now you can see that it's showing up here on the chart. Sometimes I like to use light view, and sometimes I like to use dark view. Right now I'm in a dark view mood, so I chose a color that shows up pretty cleanly. On ThinkerSwim, let's see, let me pull up ThinkerSwim. I usually have a daily chart, a 5-minute chart, and a 1-minute chart, and you can see here that I have a light blue line here on this chart. Okay, so on ThinkerSwim, it's a little bit different. You would go here to, well, you can do it a couple of different ways, but you can go here to settings, okay, and studies, edit studies, that's what it is, edit studies, sorry, my bad, edit studies, and here you would go down to moving average. You can also search here in the search bar. It's just been a while since I actually set them up. So here, you're going to find it here, and you'll down here, moving average exponential right here. And you can see that I already added the 9 and the 20 to my chart. I'll go over the 20 EMA in another video, but today we're just going to focus on the 9 EMA. All right, so you can see I have it set up on all my charts. It's just a lot harder to see here because I have a lot going on with different indicators. So we are going to stick to my trader view. Let's see, hold on one quick second. Okay, we're going to stick to this one. So now that you can see it on your chart, let's talk about what it actually is. And I'm going to keep the math simple. EMA stands for exponential moving average. Okay, and this is different from a simple moving average. A simple moving average, and I'm actually going to add the simple moving average to my chart here. I'm going to go down to moving average, select the one that says moving average, and I'm going to give it a contrasting color so you can see it clearly on the chart. Okay, we'll give it like a pink. No, yellow. We'll do yellow. All right, so you can see here now we have our 9 EMA and our simple moving average. The simple moving average takes the last 9 candles and averages out the price, and it tracks that along the chart. It's a lagging indicator, and you can see here that as the price went up, The yellow line, which is the simple moving average, did go up. But the blue line, which is the exponential moving average, went up more. It started in the same spot, but it went up more quickly because the exponential moving average considers the most recent candles more heavily than the earlier candles out of the 9. The simple moving average literally does just that. It just takes a simple moving average. Okay, so think of it like this. If you ask your friend, what's the weather like? What's the weather been like for the last week? They're going to say, they're probably going to think mostly about what it's been like the last day or two, more than what it was like at the beginning of the week. The exponential moving average is just like that. It counts the most recent candles more heavily, and you can see that it's more reactive to the price. So as the price goes up, you can see here that the exponential moving average is reacting more quickly. The same thing as it's going down. You can see that the exponential moving average is reacting more quickly to the price dropping. Okay, and that's important because when you're trading, you want information fast. You need information fast. The better the quality of the information that you're getting when you're trading, the better decisions you can make, right? So, now let's get to the part that really matters. How do you read it? Okay, the first thing that I look at is how is the price of the current candle relative to the 9 EMA? That's really important because if the price is above the 9 EMA, that is a bullish signal. If the price is below the 9 EMA, that is a bearish signal. So you can see here, let's see, I'm going to zoom out. All right, you can see here, as the price popped up, it was above. I'm going to take the simple moving average off here. As it popped up, you can see that it was above the 9 EMA, where price action's going up. Bullish, yes. Price action's coming down, it drops below the 9 EMA. Price action goes up, it pops up above the 9 EMA. Price action moves down, it pops down below the 9 EMA. Here you can see that the price is consolidating sideways. Okay, there's some indecision in the market. All right, the bears and the bulls are fighting over the price action there. So you can see that it's kind of hovering around the 9 EMA. It's not clear who's in control. That's one of the ways that I use the indicator. The second way is that I look for bounces against 9 EMA. I like to, one of my trades, because I'm a new trader, is I do the bull flag pullback and I look for a breakout over the first candle to make a new high after the low candle. So for me, I'm watching these pullbacks and I'm looking for the first candle to break out. Like as you can see here, I took a trade on this bull flag breakout and it touched the 9 EMA right there. Okay, then it goes back up, it comes down, it touches the 9 EMA. Here it only popped up a little bit. Okay, I didn't keep trading it, but you can see that here it perfectly touched the 9 EMA. All right, so that's another thing that I look at. And so more to that point, a lot of times you will see prices hit that point because a lot of traders are seeing that 9 EMA as a place of support for the price action. If it's already above the 9 EMA, they're seeing it as support. If it's below the 9 EMA, they're seeing it possibly as resistance, okay? So the third thing that I look for when I look at the 9 EMA is I look to see if it does drop below the 9 EMA, then I'm saying, I'm going to step back. As you can see here, it did pop below a little bit, but the MACD stayed positive. Here, the MACD was negative. I was like, and it was popped below the 9 EMA. When you start to have multiple indicators pointing in the same direction, that's when you should really pay attention. All right, so I would say the biggest thing you want to look for is the price action above or below the 9 EMA? That is absolutely the simplest way to look at it. So one of the questions that I had as a new trader last year, and I still think about this a lot because I'm still a new trader, I've only been doing this for a year, is which time frame should I use the 9 EMA on? The answer is it really depends on what you're trying to do, but I do like to keep it on all my time frames. But some people don't keep it on their daily chart. To be honest, I don't really use it on the daily chart. I use it on the 1 minute chart and the 5 minute chart because those are the charts that I'm trading on. I'm often looking for multi-time frame alignment between my 1 minute chart and my 5 minute chart. So I like to have the 9 EMA on both of those charts. Okay. And like I said, when you see multiple things pointing in the same direction, that will give you more confidence that you're making a good decision. Okay. So my suggestion is that I would put it on, I would put it on your 1 minute and your 5 minute chart and watch it. See how it works out for you. Think of it like, one tool in your toolbox. This isn't the only tool, but it is one tool in the toolbox, and it is one that is very well respected and used by a lot of traders. Okay, so now I've given you a little bit of, one thing I wanted to go over was mistakes. One thing that a lot of traders do, and I kind of touched on this a little bit, but they'll treat an indicator like it is the only thing that they should be looking at. So right here, I have it isolated on the chart, but like I kind of alluded to earlier in the video, the most important thing you want to look at is if you're looking at multiple indicators, are they all pointing towards the same conclusion? If the 9 EMA is saying one thing and VWAP is saying another thing and the MACD is saying another thing, that's a red flag. There's some indecision, there's something not working there, but you want to look at all the indicators pointing in the same direction. The second mistake is everything might look good on the 9 EMA, but you're selecting the wrong stock. So if you haven't screened your stock based on your criteria, I tend to follow Warrior Trading's 5 pillars of stock selection. And if you haven't screened your stock, then it doesn't matter how good it looks on the 9 EMA. If you're on the wrong stock, you're on the wrong stock. So, and the third thing is you, of course, want to look at all of this in the broader context of the actual market on a daily basis. What's happening in the market? If the market's in the tank, like it has been often lately, you're going to be more cautious looking at all of these indicators. Okay, so let's kind of give a rough summary here. The 9 EMA is an exponential moving average that tracks the average price of the last 9 candles with more weight on the most recent candles, right? Okay, you read it by asking, is the price above or below your 9 EMA? Okay, so that is what you want to do. You're going to avoid some of the mistakes we just talked about, which is ignoring all the other indicators. If all the other indicators are telling you something different, that's a red flag. And remember that the 9 EMA is one tool. It's not the only tool. It's one that's well respected. It's one that's widely used, but it is not the only tool. If this video helped you out, please subscribe to my channel, like my video. I'm also over on Substack. I'm posting there on Mondays for free subscribers and Fridays for paid subscribers. I'll have exclusive content. I'll be doing more videos on indicators, and so see you next time.